Hey, mate.
Andrew, how are you?
I'm good. How you doing?
All right. Very good, thanks.
It looks as though we're in two different rooms, but we are actually opposite each other. I've got this kind of huge Rove background, and then you've got the what do you call it? Blinds behind you. So it feels like we're in two different locations. But trust us, we are in the same room, right?
Yeah. So good to see you, mate. Everything good?
Yes, all good. Thank you. How's your week been?
Good. Really busy actually. So been actually non-stop, which is good. We had that kind of obviously Eid break, and you're never really kind of sure what happens after Eid, whether people need even more time to adapt. But it feels as if Dubai's kind of really woken up.
Yeah, totally. Yeah. I mean, if the traffic's anything to go by alone, that's always a big indicator. But just while we kind of see a few more people joining us, so we should probably say hello to you guys. Welcome to the Growth Show, guys. So this is our weekly catch-up or roundup, as it were, whatever you want to call it. Kind of anything related to growth and what's out there, kind of regionally, locally, and globally. So appreciate you guys joining us. Appreciate the support. We've been going at this quite a while, so it's nice to have kind of familiar faces in the crowd, plus obviously new people joining all the time. So
yeah, it's actually been a year, Andrew. So
is it really been that, or has it been me saying
you've
for the
been saying
last 6 months?
For ages, but it's actually a year this week. So
oh, really?
Yeah. So
should we celebrate next week then? Like wear a little party hat. I'll celebrate by getting a shave or something. There we go. That won't happen.
So we do have some new faces today as well, by the looks of it.
A few new people coming in. Thanks for joining us, guys. Obviously, so to give you newbies kind of a bit of an idea, a rundown of the show, Amit and I kind of dive into anything of local interest at the moment, kind of things that's popped up in the news that we feel is a good talking point. Then we take a bit of a deep dive. We end up on a hack, and this is the second week effectively of the deep dive, right? As far as we've taken a look at different industries and potentially how we believe they're ripe for disruption, basically, right? We stuck with recruitment last week, and it was cool. We had some, recruitment professionals in the room that hopefully we didn't tick off too much.
No, we had some good feedback for that. Yeah, because look, it's always, when you're kind of looking at specific industries and we're not actively involved in those industries, I think people appreciate the kind of, the objective view at it, almost like that view outside.
Exactly.
And I think that was kind of consistent with the feedback we had. That there's definitely some kind of new ideas and new ways of looking at things that perhaps hadn't considered before.
Yeah, definitely.
So hopefully some more of the same today.
Yeah, well, we're hitting banking today, right? Banking, credit cards, looking I think from a personal perspective and a business perspective. I think that's obviously personal banking and business banking. I mean, to see, but it'll be good to dive in. But what anything that caught your eye this week?
One thing I saw, and I think a lot of it's been, or a lot of new stuff is coming out of Apple's kind of privacy move, which we've spoken about before. But the fact that now potential, advertisers or app owners who don't now have access to what's going on other apps on your phone. That's kind of created some challenges, and the one I saw was Snap,
right,
where they've basically said, look, why don't we just offer almost like a very direct e-commerce product as part of their advertising product?
Okay.
So now rather than kind of be reliant on what people are doing across other platforms, by kind of integrating it and bringing it sort of one step closer, they can use their own products to essentially drive sales.
Okay.
I think it's a smart move. I think Snap have done a lot of really, I don't know, they've just executed really well.
Yeah, interesting acquisitions, right? It's very technology based, not social based.
Right, and I think they were very smart in kind of realizing that quickly that the audience would sort of naturally come in as long as they kind of maintained what they were trying to do without moving the goalposts too much. But I think just those little moves that they do make. So they're now going to almost look at reintroducing those lenses when it comes to e-commerce and things like that as well.
Excuse me. Oh, okay, excellent. Yeah, that's cool. I mean, look, my one is along a similar vein, actually. And this was the announcement of the relationship between Shopify and Google.
Okay.
So I mean, I think this is huge. Shopify during COVID has kind of gone strength to strength. It really is one of those platforms that you can fire up a shop in 30 minutes. Get yourself up and running and selling. It was a bit more difficult here locally, but now with Stripe, I think it's coming into the region. It's a bit easier to set up.
Have you integrated Stripe to anything?
No, I haven't.
Okay. So I've integrated it into 2 sites.
Perfect.
Just to see how quick that process was.
Okay.
And then integrated into HubSpot.
Yep.
The first time took me 8 minutes because I was just fiddling around and trying to look at documents.
Okay.
Second time, 5-6 minutes.
Really?
I mean, that quick.
Yeah.
Bearing in mind, and I know there's people who tune in who maybe don't understand some of the complexities that we face in this region.
Yeah.
The last time I set up any kind of e-commerce or payment gateway to any kind of store, it took 6 weeks.
Yeah.
So we're literally talking 6 weeks to 6 minutes.
6 minutes.
Yeah.
I take it that you haven't had this conversation with Jan yet. You're saving this nugget for later on, right?
Yes.
Okay, realised because I'd obviously signed up for it last week, and then it literally said you need documentation. That's why I said to left it, but that's good. 6 minutes, okay.
And that included actually not just that, but like I said, integrating into HubSpot. So literally now, through 2 of those portals, payments can be accepted through HubSpot landing pages.
Crazy.
That quick.
Yeah. So Shopify. So Shopify basically are tied up with Google now. So obviously Google being a huge driver of e-commerce through the shopping ads, essentially opening up that entire kind of platform now to a moment of discovery for kind of people that are on the Shopify network, right? Okay. So I think massive opportunity. I mean, look, I think what people are starting to realize potentially is it's relatively straightforward, or globally it's been relatively straightforward to build a shop online, but to generate business and get customers is hard, right? So if you now got the power of kind of Google to pull that in, I think it's a move in the right direction, basically.
I think it's genius.
Yeah.
Look, I think Shopify for me are just one of the strongest companies to come out of COVID.
Yeah, definitely.
I mean, their stock price reflects that as well. But they've just been, I think they're just a phenomenal business.
Yeah.
Honestly, I think when you look at everything they do, and literally everything they do, every move they make is designed towards simplicity for users, right? Because they're taking, obviously, their revenue comes from how active people are in terms of the stores and all of those elements. But not only that, it's the moves they're making in infrastructure, right? With a supply chain now, where I think for the last year they've been acquiring logistics like businesses, right? Warehouses, distribution.
Right,
I think what they're trying to do is say, okay, right, if we are, I mean, they've only
the face of the business. Why can't we be the back end as well?
Right. And essentially, what that means is that they make more money, right?
Yes.
But they're making that process so much smoother for all of their merchants. Everyone has created a shop on their platform.
Yeah.
And it's super smart. And look, if we almost go back and there's no way that Amazon is going to be able to continue being as big as they are.
No.
Right?
No.
Because Amazon's goal isn't to just maintain that, it's to become even bigger and even more dominant, right?
Well, talking about buying MGM, right, at the moment.
Well, yeah, exactly. Saw that yesterday. Yeah, which was 9 billion. Again, it's
pocket change.
Yeah, and it really is, right? That's the reality of it. But when you look at there's just no way that the US government or even the European Union Commission there are going to, there's going to be antitrust issues there. Amazon's probably going to be broken down into smaller companies, whether that happens, in the short term or in the medium term, it's going to happen. But then that just paves the way for Shopify to potentially be the single largest player within e-commerce. I mean, outside of China, obviously.
Yeah. But they've been smart about it as well, as far as having the platform that they've got that whole ecosystem as well of kind of partners, right? So they provide analytics, for example, but there's 50 companies that also provide analytics on the platform if you want to integrate those as well. So I think they've done a good job of integrating other partners to make it even easier to choose that as a platform, right?
Yeah, exactly.
Like you said, I mean, it's got a HubSpot integration. That's one of those native integration that's there, the Stripe integration, the other payment gateways. I mean, I think, as you said, they're trying to, it is one of those things that they almost, epitomize the frictionless business now, right? Yeah. There's just no friction there. So yeah. Speaking of frictionless, I thought this was just quite interesting as far as more of a bit of a land grab. So it seems Netflix is now kind of courting gamers, as far as they're trialing a subscription for gaming. So streaming games, so similar to Apple Arcade, and obviously Amazon as well, when they have that kind of streaming game, Fire Stick and everything. So now Netflix are looking at this subscription gaming, which I thought was quite interesting, because obviously multi-billion-dollar industry, and I don't know, it feels like, as we've obviously mentioned there, as far as the land grab for Amazon, and they're getting involved in so many different things. Perhaps Netflix now feels like they've got such a captive audience, and we're only delivering movies and TV. What else can we deliver to this phenomenal audience that we've got, right? Yeah. So I just wonder, games is first, but I wonder what will be next, right? Is it tying in with, food delivery and things like that? Because obviously I'm sitting there watching, or I'm sitting in front of a device, is there something else that can happen on the back of that, right?
And I think it's a really good point. I think for sure, Netflix have to look at kind of diversifying away from content, because we've seen, another pandemic comes along, and again, they can't go and produce new content.
True.
That becomes a bit of a challenge. But also the cost of creating that content all the time. I mean, their content production budget is the equivalent of some small countries' GDPs. I mean, that's how big it is, right?
And a lot of competitors now, right? You got Disney branched out and kind of spun off and have done their own now. I think the likes of Discovery, which traditionally has been a very kind of TV or cable based, is now, streaming, right? You've got obviously the Amazon Primes of the world that again are streaming. So there's so much more competition there now as well, right?
Yeah, no, I think that's definitely one to keep a lookout of.
Something interesting, just while we're on Amazon Fire, I don't know if you've noticed, but on the Amazon Fire Stick, I spotted something last night, which I thought was quite interesting based on the shopping. And they have live channels that you can watch, shopping channels. So there was a guy last night on the Lego channel, and he was building like a Star Wars, Darth Vader helmet. Yeah. But at the same time, you could buy that through Amazon, one click, and then scroll through a whole load of other videos that he's done previously on live. So there's people kind of doing fashion shows and all, and it was phenomenal. It was just going back to what you were saying about Snap and a new way of shopping. Yeah. Clearly, this is something I've never seen before. It just kind of popped up with the new layout.
Because you're already logged in.
Yeah, exactly. I'm logged in with a Fire Stick. They know who I am. They know I'm interested in Star Wars, clearly, right? And straight away, the first channel I see, live shopping channel, about 300 people watching him. Just kind of, watching him build out Lego and kind of, him saying, oh yeah, I did this build before you can do. I mean, I don't know if he's a seller. It went through to Lego, so I don't know how that works.
Sure.
But I thought it was pretty cool, actually.
That's really smart. Yeah. That's really smart. I like that a lot. I mean, that's it. I mean, again, future of QVC and those kinds of channels is basically this, right? One click instead of having a phone up and or go online or
No, I mean, just click straight
seamless, right? Very cool. I've got one little bit before we move on to the main topic.
Yes, I saw that. I was just going to ask you.
and it's a funny one actually. So, and I think this is very much US data.
Yes, sure.
But the sales of hand sanitizers are massively down compared to say July last year. So in July last year, the weekly sales for hand sanitizers were $52 million. And the weekly sales last week was $9.2 million, which
huge drop.
Yeah, and also I mean, masks obviously would have dumped off a cliff, right? In terms of what's happening,
especially my mate who's in South Carolina this week. Yeah.
Well, yeah, I mean, it's not.
There's no COVID there.
Yeah, well, I mean, but also it's not mandatory for masks, right?
So that's right.
So with so this is interesting. So I mean, all of these kind of industries which, and I was talking to. I played golf, funnily enough, with this guy who runs a perfume company,
right?
And they're the ones that create the concentrates,
okay.
right, the formulas or whatever it is,
Yeah.
and then they go and sell it to all these other brands.
3M and all
right?
that, yeah.
And they're apparently the biggest in the world, or second biggest in the world, like in the top 2.
Okay.
And he said nobody was going out, nobody was buying perfume, nobody was buying aftershave, but he goes, we've got a hand sanitizer business which has just gone through the roof.
Yeah, sure.
So it's really interesting how, and he said that saved the business for them.
Right, must have,
because of the licensing agreements, and it's all based on, revenue shares. And
yeah, I did. It's an industry I didn't even think about an impact. Right. Aftershave and perfume. Yeah,
exactly.
Because you've got an aftershave when you head out the door, right? You don't really kind of sit at home, sitting there basking in aftershave.
Where do you put aftershave?
Me personally.
You personally, mate?
Yeah, just other parts of my body wash.
I was going to say.
No, the best. Apparently it's here, right? Very ladylike. It's here. It's on the wrist. Yeah. That's where it is.
All right. So I think on that note, let's get into what we came with.
Perfect.
So last week, guys, we spoke about the recruitment
recruiters. Yep.
And the reason we spoke about that was because of a industry report which came out. It was very kind of localized to where we are, the UAE, but it did get us thinking. And essentially what that report outlined were the top sort of least five trusted industries.
Yeah, that's right. Yeah.
And it was really interesting. So we kind of took it in order, but initially the least trusted industry or profession within this region were recruiters.
Recruiters, yeah.
So we kind of took a bit of a deep dive on that, looked at why that may be, what they can do, how do they kind of, get away from that.
Yeah. And what haven't they done?
Right, exactly, yeah. And number 2 on our list was credit card companies.
Yeah.
And again, we thought that was quite interesting because, again, love them or hate them, there's a real kind of purpose for credit cards and all of that kind of stuff.
During COVID, yeah.
But why is that, right? Bearing in mind they, potentially there's some good in there. Why is it that they don't trust, credit card companies, or perhaps again, is it that people who are selling credit cards are trying to push credit cards, right?
Yeah, I think it may be more in line, to getting a credit card or somebody trying to sell you a credit card. I think there's obviously issues associated to owning a credit card, right? Aside from the costs and, some people get stung with an annual fee and things they didn't know about or whatever. But I think this leads into the fact that people just not trusting it, right? So, as far as cold calling or kind of how do they get these lists? I mean, I think what's interesting about specifically, kind of, if you look at the region, credit card companies, they've gone through a bit of a churn, right? So originally it was horrible here. You'd be hounded by credit card companies, right? And there has been some laws that have passed. So they moved into that other space that is very distractional and disruptive, malls. So, you're a mall or you're a coffee shop or whatever, and there'd be a stand and someone like, do you want a credit card? Do you want a credit card? Do you want a credit card? So I think that might be that trust element, right? It's just kind of like, I don't know, annoyance versus,
And I think that comes down to, again, one of the consistencies that we spoke about in terms of these 5 professions were how people are kind of paid, right? So if, whether you're perhaps in recruitment, selling credit cards or pitching creded cards, real estate was on that list,
that's
right? Wealth managers or kind of financial advisors are on that list. And what we kind of saw, which was very clear from a consistency perspective, is that a lot of these guys are paid in commission.
Yeah, numbers go.
Very kind of, low basics, high commissions.
Yeah, that's right.
And so, is that one of the reasons why these industries are not trusted? And I think that credit card industry, and I think also when we kind of extend this to
banking,
bankers, like people offering loans, other sort of financial products, if that commission component is in there, is that what's affecting how these people are out there pitching these products, right? Are they kind of excluding bits of information that might be actually really important, but they perhaps believe that might impact a sale? So they're very kind of sale focused, getting people over the line, which I for credit cards, I definitely see that. But yeah, I think it's really interesting to see, like, okay, why? What is the reason? And I think especially in the sort of this industry, right, when we're talking about money, I think that's part of the challenge, because I think everyone's, and especially right now, so for the last year or so, people have been very sort of apprehensive and very careful about where they're spending their money. And actually, I was at an event yesterday which had McKinsey presenting. And they were talking about the
people not spending money with them.
Well, naturally, I think people are. But I think what they did see is the shift in how people are shopping.
Right.
And so one of the panelists is leading. I think I signed an NDA, so I've got to be careful. But basically, leading a car manufacturer that's very prestigious and starts with an R. And
oh yeah, they famously did buy a credit card in Saudi Arabia.
Right.
That's public. It's in the public domain.
Okay.
Yeah, so you can buy cars through credit cards.
Right. But what this guy was saying is you can't get one of their cars until next year, right? Because the ultra rich have maybe just got richer and are affected and not impacted. But what the McKinsey guy was saying is actually the trend at the moment is that people who were buying maybe sort of mid to high luxury, not maybe the premium, so many of those are now spending their money in other places.
Yeah.
Right. So going to maybe slightly cheaper stores, like, maybe going from a Waitrose to a Sainsbury's or something. But essentially that's what's been the trend, right?
Yeah.
And so when people have got that kind of almost, I don't know, they're very careful in terms of where they're spending their money, that mindset's there. The last thing you want to do is then, get caught out by somebody from a financial perspective. And I think people are then naturally on guard, right? But I don't know. I mean, what other challenges do these guys face from your perspective?
I think from the credit card and kind of banking scene, I think is more. It seems to be more driven by incentives, and I mean gimmicks versus actual, credible incentives. I think if we look at it from a personal perspective, and then we can talk a bit about business accounts, but I think from a personal perspective, most of my friend set, let's say, has credit cards based on some type of benefit, right? And that may be golf. It might be previously, for sure, it was points, right? Mileage associated to, which is kind of dropped off a cliff. Obviously, air miles. Some of it's cashback, specifically here because most of the schools are private. There's some element associated to cashback when you pay for schools or when you pay for certain things. So I think they're incentive led, right? In the sense that people are not using credit cards necessarily because they have to or want to. It's more about some of the cool stuff that I get with it. Maybe lounge access, right? So you get a credit card with lounge access when you kind of fly and things like that. So I think that's also an interesting dynamic when you're selling something, but it's not actually the reason that someone's purchasing it. If that makes sense, right? It's more about what I get for that as opposed to actually usage.
Right. I think and that kind of goes in line with, there's an interview I was watching a couple of weeks back, and it was this professor out in the States, and he said the worst invention that's ever been created was the debit card, right? And he's like, why would I take a risk on my personal money when I can take a risk on the
somebody else's? Yeah, that's right.
Essentially credit card, where you're protected, you have so much more, blah, blah, blah. Super interesting, right? And I think, again, it's one of those where use a credit card properly, costs you nothing, and the benefits are there. So that makes, but then you'd think, well, surely that just plays into the hands of these credit card guys. Why are they not trusted? If they're offering something that's potentially hugely beneficial. And again, I think it comes down to what they're not telling the...
Yeah, that's what I mean. I think it's more of, okay, look, you can get this, and this, and then when you get down to nitty gritty, it's very much a honey trap, right? It's okay. Well, I can get gold access on my card, but the fee's like $1,000 to join. Oh, hold on, we didn't talk about joining fee. It's just it's the first year, and then you look in the small print, and it's not just the first year; it's continuation of the years, and forever you've got it, right? And then perhaps it's different levels of access based on that. Oh, well, hold on, you don't qualify because you don't have the right salary or whatever. So I think they're honey trap driven, right? So it's kind of reeling you in, having a conversation, then looking, as opposed to possibly being honest and upfront. straight away. Because if you look at even all of so there's been a transition to the way they're kind of targeting individuals. It's running online now. It's running on social. But you only have to look at all the comments, for example, on some of these ads that, just people are not happy, right? It's like, oh, I didn't know it was going to cost me this, or I couldn't access this, whatever.
Well, I think that's part of the problem here as well, right?
Yes.
So, everyone has that story about their bank.
Yes. True.
Right?
Very true.
Very few people can sit there and say, hey, I had such a great experience with my bank. Everyone's moaning about something, right?
That's right. Yeah. Very
true. So I think that's part of the challenge, because again, credit cards, less so elsewhere, but over here are very kind of intrinsically linked to banks, right?
Yes. Yeah.
And I think that's part of the issue here, that, essentially you've got people who are perhaps dissatisfied. I think people want to work with, I think people are happy to work with a bank which perhaps has, I don't know, a reputation which isn't as bad as the others, right? Rather than one that's got
best of the worst, as it were.
Yeah, exactly, right? I think there's that kind of mentality when it comes to this industry. But so one thing I wanted to ask you, Ben, is we constantly contacted by fintech startups.
Yes.
Why do you think that is? Why do you think this is the industry? Because so much funding now is going towards fintech, right?
Yeah.
Why do you think that is? Why is it that, I don't know, new startups are seeing that much opportunity in this sector as opposed to other sectors?
I think essentially because aside from the trust issue, it's essentially, a broken industry, right? Across the entire financial space. Mainly because of the incumbents that are there and the legacy associated to, whatever currently sits, right? I feel like that's the reason that is most likely open for disruption, because you've got these big behemoth financial organizations that either through regulation or not trust, or data policy, protection policies, even in some cases, government restrictions, are not able to move with the times, or are not able to be as proactive as they need to be in this current climate. So I'd say that's things not outside credit, like things like peer-to-peer lending, all of this kind of stuff. It's just become a lot more open, right? So I think I feel like that's one of the reasons.
Yeah, I think you're right. I think it's right for disruption also, because these guys don't really make decisions quickly.
No.
They haven't moved with the times, like what you said.
Yeah.
But I go back and obviously one of my cousins owns a large foreign exchange business in the UK.
Yeah.
And again, that business and that whole industry today, that kind of FX company, that industry exists purely because the banks were just trying to be so greedy with foreign transfers.
Yes.
That's it.
Yeah, true.
That's it, right? It's almost like they failed to kind of understand that actually if they made this much instead of this much, but then made it really difficult for new companies to enter that industry.
Yeah.
Today for billions and billions of dollars globally that are going through foreign exchange focused businesses as opposed to banks. It's nuts. And guess what? Guess how these foreign exchange companies operate? They operate for banks.
Yeah.
Right.
Yeah, exactly.
So they've gone in and negotiated rates much better with the banks than what the banks are willing to offer their customers. And on the back of it, the banks have now created an industry that hurts. It really does hurt, because there's so much money that's not going directly through them. But again, I think it's but every part of this, I think, is a challenge. You mentioned earlier when we were talking about Apple, and how Apple are getting in. But again, that comes down to probably frustrations that people have, I guess. Right?
Yeah, it's bizarre. The Apple game is bizarre, because obviously the narrative is very much based on security again. So they're definitely kind of priding themselves on that security, privacy play, right? And the narrative was very much around security, right? Where every transaction would generate a randomized number, so there wouldn't be that traditional sense where you kind of we've done it where I've you've sent me and I've sent you pictures of credit cards and the numbers on WhatsApp, right? I mean, it's kind of, so obviously we didn't do that if the bank's listening. But you know, they led with that security thing because it was broken, right? And I think at the time, this was pre-COVID, but obviously, you know, ideal time because more people are transacting online. A lot of people, I mean, some banks, especially in the States and UK, are offering online cards only, right, where most of your purchases are going to be. But I wonder, even with something like that, how often we're going to need a physical card. I mean, why do we need a card anymore? Obviously, you know, in some countries there's not the tap functionality, but I think obviously with COVID, nobody wants to touch money, right, at all. Nobody wants to handle money or handle, you know, let alone a card. And why would you when you've got your iPhone or your Android or your Apple Watch or whatever? You know, everything is touch-based, right? And everything's trackable as well, right? That's the amazing thing. You know, open your Apple Wallet and you see all of these transactions that you've made, right? So I think there's definitely space for some of those. You know, if you look at something like, for example, the Cash App always interests me in the States. So Cash App started, it only had a debit card at the time, but digital bank. They basically, you know, their whole startup philosophy was based on for every account that opened, $10 goes to a good cause, right? You know, you choose the cause, right? Plus, obviously, if you start to put more money in, you can allocate money to a good cause. Then you could buy cryptocurrency. Then you could. It just made it easier to access different stuff, right? And I think that as soon as you start to make things easier for people, because that's the other thing, banking is hard. It's hard work, right? I mean, it's frustrating and it's difficult and all of these other things. So as soon as you have got an industry that is difficult to deal with, and then you've got organizations that are difficult to change, that's just ripe, right? Ripe for opening, you know?
No, I think you're totally right there. I think when we spoke about recruiters last week and how they potentially missed out on some opportunities during COVID. Right? What's your thoughts here? Where do you think these guys have really missed out?
I can't believe that I don't know. Regionally, obviously, is what we see, right? But obviously, we keep a track on things in the US and Europe. But it feels as though no one really, you know, stood up and owned the e-commerce space from a banking perspective. And by that, I mean that everyone started to see it, right? The transition across to, you know, moving to digital and going back to what you were saying about people thinking from a budgetary perspective. Still now, most of my friends, they don't go shopping, right? It's all online because you can basically budget as well, right? You don't stand at a checkout and grab things at the checkout, or you don't, you know, see something and, you know, which everyone has done in the past. So I think with that in mind, it's interesting how no one kind of took on the ownership of that and said, let's start educating a whole host of people that have never, you know, shopped online, never had to use a credit card, never had to use any credit facilities, you know, any of this. And then also at the same point, you know, not much of a tie-in. So you do see sometimes with like the Amazons, so things that people are obviously making more bigger purchases online, so there's staggered payments or this kind of thing. But still, again, it's so hidden away and so deep you'd never know about it. Why wouldn't you be shouting about that, right? You know, when you go online, you can buy pretty much anything you want now. Oh, and by the way, we can help facilitate that. We can help you do this. We can help you do that. So I think it's just interesting that no one really took the opportunity to jump on that, right? And kind of take control of it, right? Effectively. I think that's, and also, you know, with I think tie-ins again is another thing. I mean, I know you bank with somebody where they've tied in the facility to buy shares and, you know, gold and this kind of thing. And I think, why haven't all of the banks done that? Why haven't the banks, you know, almost looked like themselves as a vehicle to access to individuals with money, as opposed to a place where people put money? It's like, you know, you've got access to all of these people and you know so much information about them, precious information. Why hasn't anyone taken that opportunity, right? Really, I mean, that's what I think. Interestingly, in UK, there's Virgin Money, right? So they took over a whole host of, I'm trying to think of the bank there was, but essentially what was interesting about those, this is obviously pre-COVID, they were saying that, you know, no one wants to go to a bank. And I don't know if you've been in banks back home. You must have banks recently back home. They're very different from when we left, right? It doesn't. It's open space, and it's I don't know. But the Virgin Money is quite interesting because they turned this place pretty much like that to a place where there's a co-op workspace, there's a coffee shop, there's a couple of e-commerce clients that are kind of sitting there, and you can do returns. Oh, and by the way, you can do your banking.
Right.
So it's kind of like you go there for perhaps a meeting. We'll have a coffee, we'll catch up, and actually I'll do my banking while I'm here, right? Or speak to an advisor about X, a loan or whatever. I mean, so I think that's an interesting approach that they're doing. But again, it's rare, right? I think that approach is rare.
Yeah, I think so. Look, I think it's funny when we look at some of these opportunities. I think one of the bigger opportunities as well have been from a communication standpoint.
Yeah, okay.
Because I think in the early days of COVID, again, we can only talk locally because we just haven't really traveled like we were before. But what we saw hands-on was a lot of banks actually for the first time being proactive and saying, look, we understand. Do you need support? Do you need help? There was that kind of stuff. And I think that was good because I think they kind of understood that people needed that. And then they were like, shit, COVID's kind of not going away. And so after about 3 months, they were like, okay, enough now. We've helped enough.
Yeah, exactly. Yeah.
And it was back to business, right?
Yeah.
But I feel as if they've missed out on, again, I think, some of the communication, the helpful communication, right?
Yes.
The supporting side was phenomenal, but the kind of help, the general help, right? In terms of, okay, look, you are maybe transacting more online now. Perhaps you need to be more careful about this. I don't know. I mean, there's just other things.
Yeah, it's interesting. I wonder, you and I spoke a bit about this, about the airline industry and potentially how they may have taken advantage of the COVID situation, right? As far as they're offering to you as a traveller, right? There's some things that they seem to be doing right, and there's other areas where you think they definitely shave some corners there. And I think that the banking space is probably also, one of those areas. I mean, reduced hours of customer care and, things like this. I think there's been a bigger drive to online encouragement to kind of interact on apps and interact online. But the plain fact is that sometimes you just need to get to a branch sometimes here. And that obviously with the reduced hours online of support and reduced hours in branch, I wonder how long that's going to go on for, or similar to, is that ever going to come back? Because previously it was 24/7 support. You could 3 o'clock in the morning, you could have a conversation about a loan, right? Yeah. Now all of that's been stripped way back, right? And it's kind of emergency services only. And I wonder if some of those, is this a game where somebody has pulled back on that customer support? Is this a chance for a digital bank to go in and go, well, all of our customers transact online anyway, for example. You don't need to visit a branch. You don't need to, oh, by the way, we're 24/7, right? Because we always have it.
Yeah, look, and digital banks aren't new either, right?
No.
And they've been working phenomenally well for years.
Yeah.
The funny thing is, for digital banks over here, which say, hey, you can open an account in instantly or in 24 hours. Again, having kind of tested that out, it's like the first one took 4 weeks because someone had to still look at whatever. Yeah, because you still have to submit documents, and by the time they review it and kind of get back to you, I mean, it was nuts.
Yeah.
But I think, I think you're right. There's definitely been more. A bigger drive towards using the app and look, that's great. And I think as long as I get the user experience component right, it works. Yeah. That said, who we bank with as a business, obviously I had my visa renewed a couple of months back, and so they're like, look, your Emirates ID's expired. I'm like, okay, cool. Can I just send it to you? No, you need to go into a branch. And I'm like, again, this is just stuff like this, which just frustrates you because I don't want to go to a branch. I mean, that's the last thing in the world I want to do. But
I mean, I think what, it goes back to that piece that there's certain elements that and this goes back to potentially those incumbents again and old tech where, from a government perspective in this region, very highly digital, right? So, you can do a lot online from a government perspective in the last 2 years and you couldn't do previously, right? It was kind of go to this guy, this stamp, come back in 6 weeks. That's all kind of transformed from a digital perspective. And I think there's those allowances for other financial institutes to kind of lock into those. But I think sometimes there's a financial, cost associated to that native integration, either through technology or access or licensing or whatever. And I think some of the time there's just not the facility to do that, right? Yeah. And I think that is that challenge, trying to get, and look, go back to that trust piece. I think the thing is that in our part of the world, we give up our personal information almost daily. I mean, to get in a building here, you've got to hand over an ID, right, which effectively has everything on it. I mean, you're given over an ID that has, your blood type on there and all this kind of stuff as well. And now, if you're vaccinated or not, but that's unusual, right? In a lot of parts of the world, people would scream blue murder before handing over any kind of personal information. So I think that again is something else that has to be considered, because obviously in the financial space, it's got to be regulated, right? There's got to be checks and balances or whatever, right? I mean, this is why we've seen some of the carnage with crypto, right? Over the last 2 weeks, it led to believe that it's all based on Chinese trying to siphon money out, right? Chinese billionaires through a space that doesn't really exist, right? So I think, as much as it's ripe for the picking, it's perhaps looking at focused areas, right? Or providing technology to that space, as you said, with fintech.
Yeah, I agree. So what does the future hold, mate?
Future hold. That's it, crystal ball stuff.
Sorry, just for this.
Crystal ball stuff, yeah? Just specifically around banking.
Yeah, well, look, we kind of touched on some parts.
Yeah, I'll tell you. I don't know if you remember this. It must have been about 7 years ago. We were at a conference in Abu Dhabi, and we were speaking around, I think, acquisition, kind of client acquisition. And there was a bank at the time that had just built this branch for kids. Right, it was a branch for kids, and there was kind of Lego, and there was all kind of stuff, and it was to encourage children. And look, what they were doing was something that we're quite passionate about: financial literacy for children, right? But it was getting them into the branch, because it was like, how are we going to get these kids in the branch and kind of get them working and getting them doing that? I don't know if now we're 7 years down the road. I mean, really, any of our kids gonna even know what a bank branch is, like your local bank? I just don't think they will, and because, I mean, now obviously it's relatively straightforward for them to fire up their own, bank account through us, obviously, but everything's on an app, right? That they need, sure. Right? And so I wonder, if the kind of that industry at the moment look at that kind of age group, right? Focus on that kind of age group and what they're doing, how they're purchasing things, what are they integrated with? Is it that you go with a bank because they have a relationship with Sony and PlayStation, right? Similar to you and I may get a credit card based on golf, right? Tea times. What is it that as a kid you have to offer, right?
Yeah, look, I think that's really interesting. Yeah, because I mean, look, my kids have bank accounts here with a local bank, and literally they'll save up their money and then once a year go and deposit it, because there's no good experience. No. They're not saying to me on a weekend, let's go to the bank, right? No. Having sat, because I'm like, if you want to go and do your banking, you go and do it. I'm just trying to train them to get into the right habits. Yeah. But there's no need for, I mean, like it's just very underwhelming if you're a kid, I suppose, going into a branch. And how much of that do you carry forward? I don't know. I mean, it's a stale industry, I think, is part of the problem, right? And I think what, if anything, more and more people are perhaps talking about finance and things like that, because of things like Bitcoin, right? And crypto.
I think the gamification piece is something we shouldn't ignore, because the gamification, if you look at a lot of the digital banks, their angle on millennials or Gen Z is very much driven around gamification, right? So, encouraging people to use whatever it may be, make more deposits or do this or do that in order to win something or in order to get access to. I think that there's a lot of that. So it's kind of, if you look at, if you look at specifically, for example, there's a lot more cross promotion that goes on in the States, I feel, than this part of the world. And, you look at banks and you look at, for example, telco providers, they'll give you Netflix, right? So they'll tie up with Netflix, you sign up. And we've seen it here with kind of like Entertainer and stuff like that, where you've got, that there. But for kids specifically, I think it's more about that online space where they are able to, instantly buy a PlayStation Network or Minecraft credits or whatever. And just, again, turning, like I said previously, it's almost like turning I'll tell you what it is. I feel like, and we've spoken about this with some government organizations, and I feel like any organization that has not had to work hard for data truly doesn't understand the value of it. So to open a bank account, I have to give you my name. I have to give you this. I have to give you that. I have to get all of this. You've got all of it from day one. And they haven't done anything to get it. So the value of that, I think, is kind of like, right, it's not there. Whereas someone versus like, I just want your email. Just give me your email. I'll give you an iPad. Right? I just need your, So it's kind of. So I feel like that still is a challenge, right? So you still, and I think if you look at that first, and then they start to realize they really have. And then start to look at how can they leverage that. I think that's where there's opportunity.
Well, I think so. There's a couple of funny things here. So the first thing, I think I think you nailed it there personally. They don't know what they've got, and so they don't know how to use it.
Yeah.
Right. So I think that we can summarize it by that, and I get that constantly. So I have my bank phoning me up, and there's a dedicated gold line, so I've got that number saved. So when they call me, I answer.
Yeah.
And they're like, Mr. VS, you're a gold member with us and blah, blah, blah. Got a new credit card. And I'm like, okay, cool. What they forget is because of the crazy rules that we have in this place, because I'm self-employed.
Yes, that's right. Yeah.
I pretty much have to put down the total
value of your credit,
of a credit card as a deposit for me to get, which 15, 16 years on is still mind-blowingly stupid.
Frustrating,
right? And I say to them, I'm like, cool. I was like, I'm self-employed, right? And they're like, oh, what? I was like, because I've banked with you for 16 years.
Yeah, exactly.
Right? And we've had numerous conversations that must be on your system somewhere.
Yeah.
And they're oblivious to it.
Yeah.
But I think the other funny thing, and it's just a story for when I did open up my kid's account. Went online, searched, which banks allowed kids for bank accounts for kids, because I know, again, it's a bit funny over here. And there was at that time, there was only, I think, 3 banks that allowed it. Right. So I went to the first one because I banked. I was like, great, that's
ideal.
Great. Yeah. And it said, we have kids bank accounts. Minimum balance was 100,000 dirhams, which what's that in real money? So about $30,000. Right. Minimum balance. Like, we accept bank accounts from kids from the age of like 4 or 5. Yeah. Minimum balance $30,000. Now, bearing in mind, my kids were genuinely looking to deposit
200 dirhams.
Well, they were depositing tooth fairy money.
Yeah, exactly.
Don't get me wrong. It was tooth fairy money. It was like 100 dirhams, right? Yeah. Accumulated over about 10 teeth.
That's it. Yeah.
And yeah, I mean, this was just it's just
craziness.
Again, I think that's a decision that someone at the top's made.
Yeah, definitely. Okay. Yeah.
And the decisions that are made at the top are the ones that filter down to the bottom. And I think that's potentially why you have so many issues, right? They don't feel, again, perhaps the guys making the decisions at the top are like, we don't want to pay our credit card sales guys any money because we just need them to sell. And if they sell, then we'll pay them.
Yeah.
But what they don't realize is these guys are out there selling something in a really bad way that makes their bank and their business look terrible. Ultimately impacts them.
Totally.
Right. And I think there's so much to that. And I know now people are like, doing these happiness surveys and NPS. I've never received an NPS from my bank.
You're right.
So do they even care how I feel? Probably not. You know, as long as I keep banking with them.
Yeah.
And every now and then they do their best to piss me off. So I'll get that phone call that reminds me that my own bank that I've banked with for 16 years won't give me a credit card. And then I'll also have my account all of a sudden because I forgot to update my ID.
Perfect.
No warnings. Just like
massive.
where is that kind of, you know, the people side of it?
Yeah.
Just gets lost.
No, there's a massive disconnect for sure.
Cool. So few minutes left. Hack and week. What we got this week?
We've got a pretty cool one. I think we ought to I don't know, this series I feel of Hack of the Week is turning into how to replace people. That's what it kind of feels like inside your organisation potentially. But you know, had quite a humorous conversation with one of our filmmakers, Umesh, around this. And basically, this came out of a good friend of ours, James Pikeway. I kind of said, listen, I need some urgent captions for a video, 5-minute video. What have you got? And he goes, these guys are amazing. Have a look. So it's Get Capped. GETCAPTE. That's the actual name of it. And first and foremost, they give you kind of a free trial to test, the validity of it, see how great it is. And then crazily, the kind of standard pricing is €20 a month. So unlimited videos for that, up to 5 minutes.
Okay.
Even if you want to go on the premium, which quite frankly, I don't know, it's 20 minutes of video, unlimited videos. Right. So I mean, and
what do you do then? So just
so you roll in the video and then it reads the video and then it basically spits out the captions.
All right.
So the only thing that it didn't pick up on in my entire 5 minutes was Nexa. The rest of it, clean as a whistle.
Is it AI and machine based?
Yes.
Okay, wow.
Wildly impressive. Obviously, I mean, you still got to go in there and do due diligence as far as what it picked up on. But it managed to pick up everything. So I think for those of you out there that kind of are producing content, so this came on the back of a conversation as well, a wider conversation where producing content, 80% of videos in social media are watched silently. So that's why you see a lot more kind of captions associated to video content. So I think it's just something to consider.
Yeah, that's really smart.
Yeah.
Nice. Awesome.
Yeah. So get capped, guys. So listen, guys, thank you for watching and listening. We really appreciate your support. So we have been doing it a year, so perhaps we want to kind of have a bit of a celebration next year, wear a silly hat or something, as it were. But obviously next week we are looking at an interesting industry, I think, real estate. So as part of this, untrustworthy series, we're diving into real estate next week. So I think I'm looking forward to that.
Yeah, we've got some really good insights for that as well.
Definitely.
Yeah, definitely some stories we can share.
Yeah, and not
also,
share.
Yeah, we've been doing a lot of interesting work within that space for the last, I'd say, 8 or 9 months.
Yeah, definitely.
Where
a lot of it COVID driven.
Yeah, exactly. Yeah. Actually, partly where we've kind of disrupted
the
norm. So I think good to share some of the
No, looking forward to that, and see if we can get some realtors on here and ruffle some feathers as well. So that'd be good. Thank you very much, Amit. Good seeing you as always. Look forward to next week.
Likewise.
Cheers, everyone. Thanks. Bye.